All right. Good. It's afternoon. I'm sure you guys will probably get this by evening. Good afternoon. Welcome to this week's Business Times Weekly Nigeria. So this is a weekly podcast where we discuss key happenings around the world. A lot of that convo is around Nigeria. I have Isaac Osaro here. Um, Isaac is an analyst at First Securities. So thank you, Isaac, for joining me on a workers' day, and also with the busy period I've had the last few days. I don't know if you've been getting some good sleep. I haven't.
Um,
I
I
remember
only
seeing
got through to
you.
four.
Yeah, I remember seeing you on. I was on the UBA call. I think I saw your name there. I also saw you in the space. I co-hosted on the access results. So it's been a hectic week. I mean, much as it provides the bread and butter, like any other person, I just like to have a normal day. So thank you for joining. But before we go into earnings and stock markets, let's look at the PMI numbers. So the PMI numbers slipped into contraction for the first time in almost, I think, 15 or 16 months. And if I recall, my economy is right, contraction is when you go sub 50%. And the notes I have here, the decline was driven by weakening demand and slower business activity. So what do you make of those numbers? And I'm wondering, do you think at I mean, do you think we'll see a contraction in the GDP numbers due to obviously the higher elevated cost and everything? So what are your thoughts on that?
Okay. First of all, when I saw the numbers this week, the first thing that came to my mind was after 16 months or 15 months, all of a sudden we saw the cut, the drop below 50. And one thing came to my mind, the effect of the Iran-US war. Because we've seen the impact on businesses basically. Because the PMI basically measure the businesses, and for me, that is one of the biggest problem that probably affected the cut. Would that affect GDP? For Q1, no, but for Q2, likely see that. We likely see that. When we look at probably the nominal GDP, maybe we might see some expansion because of inflation numbers. But when we look at the real GDP, I don't think we will see a huge growth we'll be expecting in Q2. For me, I'm expecting GDP for Q1 to be around 3.8. And I was even expecting more to see in Q2. But with this now, for Q2, real GDP growth rate, I don't think we will see around 4.5 because last year, Q2 2025, we saw around over 4% growth rate in the economy. But for Q2, I don't think we will likely see that huge numbers we were actually expecting. For me, I was expecting over 4.5% for Q2. But I don't think that will likely happen because of the negative impact of what the war, even though for now we've not heard them launching rockets again, but it has happened. And for now, there is no lasting peace till we start seeing a decline in crude oil price, which is one of the biggest problems globally in the world today. So if crude oil price is yet to probably improve, the PMI will likely maybe might see some improvement because when I look at other indices and other indicator, some were still above 50, some but just few of them were below around 49 or so. So it's not a broad breeze. Then maybe from May, we might start seeing a broad base decline in those numbers. So for GDP, likely in Q2, to likely affect.
Mm, okay. So I think the number that caught my eye was agriculture appears to be holding tight. And I know a lot of times people wonder why we talk about agriculture, but agriculture is still a key source of employment in Nigeria. Nigeria it's an interesting case study because we are a service economy by size, but agriculture is still a huge source of employment for people and all. So, do you think so far, I've not seen any noise around fertilizer prices and all that, but obviously with what's happening around the world at some point in time, we're going to see that effect. So do you think we may see a slowdown in the agricultural sector if slash when fertilizer prices start to go up?
Surely, and I hope the government will try to intervene by giving them a subsidized fertilizer price. Hopefully, if they will do that. But beyond just fertilizer, two things came to my head. In Q2, I'm moving into planting season. All right, so we might likely see some activities because of clearing, planting. I think they're not with clearing, planting activities. But one of my major worry is I saw a report that might experience flooding this year compared to last year, where we didn't see any flooding reports. But as last month, there might be, I saw a report that flooding might likely occur this year. And then once that happens, we'll likely see the agricultural produce, which these guys have labored to work on, probably get spoiled or get run away by water. And no, last year there was no flooding. We saw the harvest, and at October, September, we saw a lot of harvest. That was what followed, affected. That was what drove the improvements in agriculture produce, both in inflation numbers and even in inflation GDP numbers. But this year, beyond just the fertilizer, which I hope the government probably intervene with some cheap support or maybe a subsidized fertilizer price. My fear is just the flood. That will also affect. We shouldn't just take fertilizer in isolation. We must also consider the flooding that likely happen. And we know in Q2 is planting season. All of those things too likely slow down activities in that space. We now so we now rely on imported food, and we know with the whole thing happening globally, inflation, all of those things. So for agriculture, we hope my hope here is the government intervene with cheap or subsidized fertilizer for the farmers.
I hope so too. I mean, I think they will because the gains we saw last year. I remember looking at last year's numbers. I was kind of surprised. I mean, festive period, you want to see food prices spike, but they didn't spike as crazy as expected. So I hope that this year will not be payback from the cheap prices or the fairly okay prices we saw um, last year. So let's switch lanes to the stock market. I mean, stock market has been buzzing. This week was GT code dividend day. I think I waited for someone to create a hashtag because a few days ago, yes, there was so much excitement on social media, so many people sharing screenshots of their GT code dividends, big, small. So I guess it's good to see that there's small buzz around the market. So we hit the 150 trillion market cap at sometime this week. We've had a couple of numbers come in. They've been looking good. I mean, we'll get to them in a bit, but the MTNs, the Dangote Cement, they have had great numbers. The food numbers have been kind of mixed. Cadbury wasn't too impressive. Dangote Sugar wasn't too impressive, even though it was profitable. Waffles. So I don't know. It seems like there's some pressure there. But your overall thoughts on the market? I think the biggest question before asking, maybe because of the ghosts of 2008, um, is this market overvalued and is this bull run sustainable?
So even me, when I saw our portfolio this month alone, the ones I recommended for my company to buy, even the returns, I was scared. This one, the market is running. Are we sure this is sustainable over time? Once I saw the performances of most of these companies, I think only few companies maybe my reports. I don't think I've seen any loss. Maybe few companies, most of those are those non-solid companies reported loss. But when we look at every other company, they reported profits. Their earnings were growing. Okay, bar the FMCG because in the last 2 years they had to raise prices to stay afloat because of inflation, FX problem, and all. And now what the numbers we are seeing this year for the FMCG guys are what are normalized price because there's no reason for them to high price again. Inflation is moderating, FX is stable. So now there's no opportunity for you to take higher prices, even though you want to take, might just be little. And also that sector is very competitive. So the moment you decide to hype your price, I move to the next guy who will give me something better and cheaper for the same value. So for FMCG guys, it is more of a normalized earnings now. Hopefully they go forward. I was a bit surprised about Cadbury because I was hopeful these guys they're also coming back. But when I saw the result, the market told them, you know what, -10 first, hold that side. But overall, is the earnings is the growth sustainable for me? Yes. How do I know? Look at the earnings. The earnings are
Mm,
growing. So it's a different case if the
mm,
earnings are not growing. When I look at the P/E ratio of Dangote Cement, 14%, we look 15%, sorry. We look at that of Lafarge, around 14%. The only difference is Boa Cement, around 25 times. 25 times, so not 4%. 14 times, 15
yeah,
times, 25 times. Historically, Lafarge has been around 8 to 10 times P/E ratio. Now it's around 14 times. Don't forget, they're taking on expansion this year. They're expanding
yeah,
from 10.5 to 14 before the end of 2026. By 2027, they'll start producing more volumes. So meaning the market to a greater extent has even priced in the expansion. So once expansion takes place next year, even more earnings for them, more volume sales for them, more revenue, more profits, and they have lesser leverage. So are the price justified for me? Yes. Will it be a bubble? Maybe from May, June, we might start seeing profit taking because the catalyst to drive earnings will no longer be there. We know we
mm,
are done with Q1, we're done with dividend payments, maybe from July. So we might start seeing a slow or dull performance from May or June. So
mm,
I don't think we're having that run of. I think April is the highest run so far, over 20%. I don't think I've seen that kind of return in many years
yeah,
because the earnings were good. Let's not go to the bank first. So let's focus on the other guys. The earnings were good. Look at MTN, over 60% PAT. Their operating expenses, the growth was not that steep because inflation has been moderated. They've renegotiated their leases that they don't pay more in dollar. They pay in naira, only some in dollar. NCC gave them opportunity to hike their prices, which was so I think last year February.
last year, yeah,
So their earnings has been great. They are investing in more capex. I saw Dangote Cement. I saw the growth in its volume. This
yeah.
is
I must confess that surprised me because I remember I was on the last call they had, and the question people kept asking them is, why are volumes not growing? And every other person is growing volumes, and I mean they couldn't really say anything. And but only to come out with volume growth now, and surprised because you're the biggest player in the market. So if everybody is growing volumes, I guess it's a good thing. But which brings me to a slight detour, and maybe for the retail person. And I know that you guys at First Securities, you're not dealing with 5K, 10K people, even though, I mean, as brokers, all brokers will tell you we have for everyone, but the reality is small accounts like that, it doesn't really work. But just, I guess being in investment space, people will say, ask you, you are having these firms hit historically, I would say mentally significant numbers. So I mean, MTN is a bit over 900, very likely we hit 1,000 naira before the end of the year. Lafarge is, Dangote Cement is close to 1,000 naira. Seplat is above 11,000. Aradel is at 2,000. No, no, this is expensive. You know what? I'm going to look for a stock at maybe 10, 20, 30, 40, 50 naira. How do you how do you convince them that there's still runway for growth? Because mentally they see those figures and they say, you know what, I'm not interested in this. Because some might say, look, if I have 10,000 naira to invest, why am I spending buying 10 shares of MTN, or why am I buying 5 shares of Aradel? So how do you convince them that, look, the runway for growth is ahead? And yes, everything doesn't always don't always have to go for the cheap price stocks. The fairly pricey blue chip stocks work. How do you convince the average person to want to go ahead with those kind of earnings for those companies?
so. But let's look for Seplat. Yes, quite pricey. 11,000. You need a lot of volumes
Mhm.
to even push the stock. So meaning is money. But I think most guys they tend to purchase lower stocks. All right. And the first thing I tell them, anybody who I discuss with, anybody who I advise, retail guys. Now, the retail guys accounts for over 41% of the total domestic performance in NGX today, meaning they are now coming to the market. So that takes us back to, is there a bubble? The domestic guys, we own the market now. We have a lot of liquidity in the system. So meaning, where will the bubble come from? Unless we the retail people or domestic, we tend to exit the market for foreigners to take over. I don't see that happening anytime soon. So as far we remain in that market, I don't think the bubble will be over. And how do I convince them? I tell them we have to focus on solid stocks that are fundamentally strong. Does it really matter the price? Yes, there might be concerns about the price, but how many stocks are like expensive when it comes to the value of the price? How many stocks do we have today that are above 1,000 naira? How many? Okay, maybe NTN very soon will get to 1,000 naira. Seplat is over 10,000 naira. Aradel is over 2,000 naira. How many stocks do we have that are around that range? How many banking stocks we have that is close to 200 naira?
Yeah, it's a struggle there. Not yet. Not yet so far.
So we have a lot of stocks we can still look at. I hope very soon they clear up this banking mess we are seeing, releasing results like a thief in the night. I hope so. I hope they clear out all of those things. So it is quite easier to convince them. The earnings are great, first of all. We've seen the numbers. When I look at the P ratio, when we compare Nigeria P ratio to other markets, I think now we're at par. Sometimes I think we might have gone ahead of maybe the likes of Kenya, maybe, because I remember the last time we're the lowest around 6 times. Now we are over 10 times when it comes to order. And as the likes of Egypt are probably around 14 to 16 times. Are we there? Yes, we're almost at par with them. So the market is probably almost at the same place where we should be. If not for the fact that we had 2 years of problem, the FX problem, the inflation problem that affected the numbers where people decided to take their money away. But now earnings are normalized. FX is great, inflation is moderating. So there is no negative driver to say the market will probably, maybe hopefully we don't. I don't think that there's any bubble or bust that will bust. I don't think so. So it's easier for me to talk to an investor. Number one, I tell you, are the earnings good? Let's look at numbers together. Let us look at the numbers together. Is it sustainable? Are the earnings sustainable? Apart from the banks where they earn some FS with fair value gain and all of those stuff, let's focus on the industrial. What are the drivers of this year's return? Oil and gas. Why? We see one of the biggest thing that happens to them, crude oil. I don't see crude oil going less than to 60 in the next throughout 2026. I don't see it going to $60. So with crude oil still running higher, those guys will keep earning money. I buy when I see cover Seplat fully. Every quarter they pay 2.5 cents. As time went on, they grow, they pay 3 cents. Now in one quarter they paid 9 cents. For them to pay, meaning the funds are coming. So they'll keep paying because their earnings for them will be sustainable. And the fundamentals strong in the economy to a greater extent, yes. I think the only concern they're going to have today is election. Election is coming. I look at the number in the last since 1999, we've only had 2 negative return pre-election year, and we'll go back to those years. There were a reason why we had such problem. I think one should be in 2014, a year before Buhari entered, where we had crisis, the killings, insecurity, basically. When we go to the other year, I think that should be in either 2018, before 2019, the policy of Emefiele, where the foreign guys, they had to leave the country. Our policies weren't great. Take away those. Now, those problems we had, our macros are good today. Our macros are looking great today. Our macros are looking great. And for me, I don't like talking politics but I could tell you where we are going to with the next election. From everything I'm seeing so far, I can tell you we'll likely win the election. To an extent. So it's more like we are seeing a direction. So let's even assume, okay, the person who might likely enter will not enter. Do you think much will affect? Do you think policy will change? I don't really think so. For me, I don't really think so. So I don't see much fear. If there are fears or concerns, maybe we might say, okay, it's still the early quarter, the first 4 months. The market is about 50% return. Do you think the 50% return will wipe off the market this year? Do you think people start selling off Seplat to 5,000 back or 6,000? Do you think they'll start selling off Aradel to around 500 or 600 back? Do you think they'll start selling MTN to 160 to 180 to 300? No, I don't think so. For me. So
Yeah.
the first time I ask myself is, are the earnings sustainable? Yes. Are the macros looking great? Yes. So if those two things are great, then what is there to be scared about? I will only advise you to invest in companies that are solid fundamentals. For a retailer, I will not tell you to go and buy a Seplat of 11,000. You know that might be pricing for you. But there are stocks you can buy below 1,000 naira. Even for me, even out there at 2,000 plus is still fair. For me,
Mm.
out there at 2,000 is still fair. If the guys continue at this trajectory, they'll keep on chasing Seplat. They might not get to Seplat, and I see maybe in the future Seplat might just do a share reconstruction because at 11,000 is quite much. So might do a share reconstruction and all, maybe to bring it to 5,000, 6,000, and then other might try to catch up with 2,000, 3,000, and all. But there are other stocks in the market that are great and one can, as a retail investor, you can enter.
Okay. So of the earnings that are out so far, I mean, earnings are still dropping. A couple of hours ago, I think I saw by Gain Insurance. So I'll start with the earnings I guess we both have looked at. Which of the earnings have impressed you, and which of the earnings have you found disappointing?
Generally, if I say the one that I found disappointing is the banks, although I saw it coming, I wasn't expecting something great because for them to hoard their results like when they hoarded the Indomie during COVID. When they hoarded their result like that of Indomie during COVID. Actually, I will not say I was actually really surprised with their earnings. I expected that forbearance will happen. When I joined the UBA call, they said the reason they didn't pay dividend was because of they had higher NPL ratio, and for me that was not enough.
Yeah,
So I felt
I totally agree. I totally agree. That's not a good enough reason. Totally
so
agree.
I felt I was the one who didn't hear well. If you remember, I asked again,
Yeah. Yes, I did. I remember that.
was that the only reason you are telling me you didn't pay dividend? They said yes. Tell us you wanted to pay, but Siemens said you didn't pay. But they can't say that. So for the banks, I wasn't surprised about their performance. But most companies they were looking good. For UACN, I was expecting that numbers because of I was expecting the acquisition to reflect, and I saw some improvements in their margins. Cost margin went from I think 29 to like I think from 26 to 29, still marginal, but that's improvement. MTN to expected. For me, I think I expected them to return good numbers for most companies. I think basically I was not shocked per se. I was not shocked per se. But for me, the only one that was a bit disappointed was Cadbury because I had high hopes on Cadbury. I really had high hopes on Cadbury. When I saw the result, I saw the following day my stand and I said, "Oh, these guys, they are killing my faith." I hope they bounce back. But for the banks, I was a bit disappointed. For the other companies, for me, they were fair. I was expecting them to come up with some good numbers because of those catalysts that were probably disturbing them in the last few years, were no longer there, so it was normal. But the biggest shock for me was Dangote volume growth. Because for many
Mm.
years they were using pricing as a shocker or to shock or to hold on to their position. But for them to have volume growth, and I remember in the call yesterday, the guy wasn't giving me. I wasn't expecting the answer I was expecting because for you to have a volume all of a sudden, you need to give me a robust answer.
Yeah.
Did you get enough government patronage? Were you getting more from investors, real estate guys? Give me something solid. Well, I was just hearing sometimes this our analyst call sometimes is I don't know. When you ask them the harder questions, they just tell you can send it to their investor relation and
Yeah.
they will not get back to you. Last year, full year volume, I asked Lafarge, till today no response. What is your volume growth? They didn't tell me. What is your capacity? What is your this thing? You didn't
But
tell me.
the thing is, there's a bit of backstory with Lafarge. So the thing was, and if you notice, to the best of, I don't know if Lafarge has started doing calls or if they doing calls openly. At a point in time, as at 7, 10 years ago, Lafarge didn't like to talk about volumes because then, Dangote Cement was essentially muscling everybody out in terms of volumes. And then you had Lafarge in the corner, and then you had CCNN and what's now Boa Cement. So I I find out, and again, I guess it comes to how we do things in the market. We need to see more. Um, I probably get more insight into the cement space from a Boa Cement call than a Lafarge, like the Dangote Cement call, which is odd, because I mean Dangote Cement is the bigger player. And I mean, and when you even look at the sugar side of things, you have Dangote Sugar, Nas Consult, and you see some of the numbers that they're doing. I don't see call details. So I'm looking at a Dangote Sugar, for instance, that you had the slight dip in revenue, and then the dip in revenue is in the Lagos segment. So the question is, if that's your biggest market and your revenue is dropping, what's happening? But even with Boa Foods that also had a dip in revenue, at least they dropped an earnings release explaining why, in that sense, it's the competition pressure kind of thing, maybe price realignment and all those things. But with other players, so I guess it's something that we need to, and hopefully as we have more attention on the markets, more retail players, more volumes. This is the first week of the extended hours trading. So I guess I guess we'll see more transparency. Maybe we need people to push more. But talking about the extended hours, it's been the first week. From your end, what are you seeing so far? It's early days. Are you seeing actually? I mean, Are you seeing more activity in terms of trades, especially the 2 o'clock to 4 o'clock time? Are you seeing more activity? Is there? Are you having clients asking more questions? What's happening? Why were the hours extended? Are they interested in the longer hours?
Um, the first thing I noticed when I saw the volume traded, the mostly Q1 we always have a lot of liquidity in the system. So that give them enough time in the market. Maybe that's one of the reasons why we are seeing this huge return in April, especially this week alone. We had a great return in the market. So I think before then they were prepped already, and for me the extended 7 9 hours or so gives them enough time to play in the market. I was even scared of for UBA on Monday with you now trading from 9 to 4. If we had a -30 or -50, maybe UBA would have gotten -50 that day. That's one thing what a longer trading hour does. But for me, it was I noticed the volume trade improved both in transaction and we saw the numbers. Maybe over time we might start seeing a normalized volume trade happening over time. We in Nigeria we like new things, we like playing with new toys and all. So maybe over time I start seeing normalized volume. But with the new opening, for us it's stressful now. It's a bit stressful every day. You have to stay in the market till like 4 after 4 and all. It's a bit stressful, but what I've seen so far is the volume growth, more injection into the market. Just in April alone, if I let me quickly confirm that in March, so okay, this is March. March total volume was around 1.7 trillion. And we'll look at that for April. For my calculation, the value traded in April so far is over close to 2 trillion. So if March give us 1.7, then definitely in April we might likely see a huge number because of a lot of transaction happened in April. But over time, I expect them to see a normalized number. But people are excited about it. Longer hours to trade, to move the market, to say these things. Hopefully, one day we might see if they would like to do a plus 20 minus 20 for us in the market. Let's check some companies who are giving us bad performance.
I think that's doable. In fact, I won't be surprised. I believe that maybe in the next 1 or 2 years, we should definitely see. I mean, it's just that we're not a very we don't take huge steps. So even when the notice, I mean, I was on the call that the NGX did, just telling people about the new hours. In my mind, part of me was wondering, I hope we don't wake up Monday morning and they just send a circular that, you know what, we're shifting this thing based on feedback from stakeholders, we decided to keep it pause for now. So a part of me, tiny part of me was wondering, I hope they are going to go ahead. So when they decided to go ahead, I would say I was positively surprised because I mean, I've had people even ask that, what is the essence of the longer hours? Why do we no longer, we need more liquidity in the market? But I think we do because I don't have the stats, but I suspect that definitely you have higher interest from foreign investors in the market. And if that is the case, accommodating them, you know, would be of benefit to us because when I think of it, the I mean the US markets are easy to trade for even us on the Nigerian side of things, 2:30 p.m., 3 p.m. It starts, closes by 9 p.m. So you have enough time. So on the flip side, if when they are just, starting out the day, we are shutting down, then we're losing. In fact, my own view, I actually, so I wish I would actually push that. Look, we should have this market run, even though it's going to be hectic for people. We should have this market actually run from 9 a.m. to 6 p.m. Let's leave it there. Yeah, because that covers everything. Even though, yes, 6 p.m. means people are going to be getting market reports at 7 p.m., 8 p.m. People are getting home 9 p.m., 10 p.m. the next day. But I think it's something to look at. And I suspect that by the time we have the volumes and because even for the NGX, higher volumes, higher trades, that's more money in terms of transaction fees, which is good for them and which is also good for brokers as well. So I was mildly surprised that we actually had it, and I'm also mildly surprised that so far the engine hasn't broken because I was going to, if I was, it's a mark of, and I know sometimes we knock the NGX on my side of things, we tend to knock them a lot, but I must give the NGX kudos that the system has been able to accommodate the volume because when I think of it, 4 or 5 years ago, I don't think you see the NGX doing this kind of volumes and value, and you don't have trading calls, BTC and there, but trades are going well. So I'd say kudos to the NGX. One more, it would be nice to see an earnings calendar, so we don't have to be literally waking at all hours to check results, refreshing. Would like to see an earnings calendar. Would have to have earnings calls because there's a lot of interest in the market. And sometimes when people ask me about this company or that company, I say I don't know what's happening because I don't. I just have the financial statements like you do. I don't have any insight. There are no calls. So I think we need to see that. I'll say lastly, this is we've started the month of May. Um, there's usually the adage sell in May and go away. Do you think that would apply this month? And then, secondly, do you think would have this whole US-Iran conflict sorted? And if that is the case, um, what's effect will it have on our markets?
So first off, will what do you think may will likely happen? Most times when we get a very huge return like this, like we've seen in April, we likely see maybe it may might be just be a decline, but how I don't think it will be that steep. Profit taking will surely happen. Might have even from Monday, we might have seen profit taking. We start that our assets we first take is -10 again.
Mm.
Other companies we start seeing profit taking, little profit taking here and there. Then once it goes down, we see some people try to mop up to get more value from the stock and all. But for me, I just feel generally May, in the absence of any catalyst, in the absence of any catalyst in May, I don't expect to see a huge performance in May. I expect profit taking to happen. People move here, rotating their position. Like for we, in First Securities, I'll tell you for a fact that we're going to rotate our position, want to take profit out of the market. If we didn't get to sell our UBA earlier because everybody wanted to dump on us. If we as a market maker, we couldn't dump enough that Monday. So that's just one of those things. But for me, I can tell you will likely get a mixed performance, but I'm tilting towards a dovish, no, a bearish May for the market, but not as steep as people would think. It will after getting a good return in April, but we'll likely see some rotation, some people are still getting some their dividend, so they'll likely put money somewhere else. When people start selling up, people start buying up those lower prices. And by the way, when I saw GT for me, last month when I saw GT fell to as low as 102. I told my company, oh yeah, enter the market. Sharp, sharp. When I saw MTN 702, the same thing now, MTN is 900. So those who entered at 700 today, probably they are over 30% up already.
Yeah.
Yeah, so
Yeah.
those are the things we'll likely see in May. People sell off, and we are there to pick up all of those pieces that they will sell off. And for the US-Iran war, so far, thank God, we've not seen them sending missile so far, even though just word of mouth and I don't think both of them want to come to a compromise. But I just have a negative feeling about what the US can do. These guys they can do and undo, and hopefully they don't do much to cause more harm to the world, because if they should send crude oil to 150 in this country, in this Nigeria here, instead of us to be happy because so that should give us more money. I don't trust our government to be able to handle that. There will inflation. Fuel prices will likely go up and all. So that will be a problem for us. And if that should go up, inflation will have to go up. MPC is happening next month. So the war should continue. Either the MPC will hold rates or they will likely have to push rate up. But all things being equal, they will likely hold rates till the next meeting, which will happen in H2 and all. So for us, it's more of inflation. Higher, better earnings, but expenditure, election year is coming. Maybe that's one of the reasons why Dangote is selling more volumes, because election year is coming. So they need to be the goodwill of the people by doing roads and all. But for me, we hope they come to a conclusion about this whole war thing, so that we can see crude oil prices probably come lower to around maybe 80, 85 before the year runs out and all. So I think that's one of the two catalysts that will happen. NPC, obviously, they will hold the rates for the month of May.
Mm. Okay. So I guess we'll see how it goes. Very likely, we should catch up sometimes. So thank you for obliging me. One is, I mean, this is what today is Friday, the public holiday. Every serious financial person who's equity focused is probably worn out, either from the longer hours or from results dropping nicodemously at night. So thank you for obliging me, and we should catch up once more. Hopefully, we'll do this next quarter as well.
All right, sure, sure.
Yeah. So have a great rest of the day, and see you soon.
All right, thank you for having me.